This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell by about 2% on Wednesday ahead of a weekend meeting of OPEC Plus producers that is expected to consider another increase in production targets in October. Brent crude fell $1.16, or 1.7%, to $67.98 a barrel by 10:30 GMT. U.S. West Texas Intermediate crude fell $1.28, or 2%, to $64.31 a barrel. 8 members of the OPEC Plus will consider further raising oil production at a meeting on Sunday, 2 sources familiar with the discussions told Reuters, as the group seeks to regain market share.
The U.S. Treasury Department on Tuesday sanctioned a network of shipping companies and vessels led by an Iraqi Kittitian businessman for smuggling Iranian oil disguised as Iraqi oil. The administration of President Donald Trump is keeping pressure on Iran while nuclear talks have stalled. A 6th round of negotiations was suspended after the start of a 12-day war in June. A senior Iranian official said on Tuesday that the path to nuclear negotiations is not closed, but U.S. demands for curbs on Iranian missiles are obstructing prospects for talks.
Moving on to the top news in the energy sector.
Russia will help China overtake the United States as the world's biggest producer of nuclear power, the chief of Russia's Rosatom State Nuclear Corporation said in comments broadcast on state TV on Wednesday after talks in Beijing. The United States operates the world's largest network of nuclear reactors, with nearly 97 gigawatts (GW) of installed capacity. China is racing to build dozens of reactors though and had 53.2 gigawatts of operating nuclear power reactor capacity as of April 2024, according to the U.S. Energy Information Administration.
The European Commission will propose measures this year to prevent countries from dodging its carbon border tariff, a Commission spokesperson said, as some in Brussels fear Chinese firms could reshuffle their trade to avoid the levy. Starting in January, the Carbon Border Adjustment Mechanism, the world's first carbon border tariff, will impose fees on the CO2 emissions of imported goods including steel, aluminium, cement and fertilizers. The system aims to put foreign producers on a level footing with European manufacturers, who already pay for their emissions under Europe's carbon market. Next, we have the top news in metal markets. Gold hit another record high on Wednesday, consolidating gains above the $3,500 level on growing expectations of a Federal Reserve rate cut this month and concerns over U.S. tariff policy and the independence of its central bank. Spot gold was up 0.4% at $3,547.27 per ounce as of 11:32 GMT. After hitting an all-time high of $3,549.53 earlier in the session. U.S. gold futures for December delivery gained 0.6% to $3,613.30. Adding to market uncertainty and potential trade tensions, U.S. President Donald Trump's administration said it will ask the Supreme Court for an expedited ruling on tariffs that a U.S. appeals court found to be illegal last week.
Prices of iron ore futures climbed for a second straight session on Wednesday, as Goldman Sachs raised its average price forecast for the fourth quarter of this year to $95 a metric ton from $90 a ton previously. The most traded January iron ore contract on China's Dalian Commodity Exchange closed daytime trade 0.71% higher at 777 yuan, $108.63 a ton. The benchmark October iron ore on the Singapore Exchange was up 0.39% at $102.85 a ton, as of 0721 GMT.
We will now look at the top news in the agricultural sector.
Chicago corn edged lower on Wednesday, pausing after a 6-week high as traders set brisk export demand and a decline in crop ratings against the prospect of a bumper U.S. harvest. Soybeans eased, with a lack of Chinese buying keeping a lid on the market, while wheat extended a day earlier fall linked to ample global supplies. The most active corn contract on the Chicago Board of Trade was 0.7% lower at $4.20 a bushel at 12:03 GMT, after climbing to its highest since July 22 at $4.24 minus 1/4 a bushel.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.